Morning all. Welcome to Anand Rathi Morning Commodity and Currency Podcast. Starting with precious metal update. Fundamentally speaking, strong US economic data and hawkish sentiments from Federal Reserves had kept upside limited in yellow metal in recent session as doubt persists about impending Fed rate cut cycle. In that sense, as market starts to adjust their bets on the Fed with inflationary concerns still persist, long-term yields remain elevated, as the upside potential for the metal may remain capped ahead of fresh macros from US due later in the week. Technically, gold futures pivot is seen near 62,000. If it surpasses 62,195, it has potential to reach 62,382. Conversely, if it falls below 61,741, we might see downside level of 61,554. Continuing with energy update, though supply concern is seen easing gradually, oil markets remain vulnerable to war-related disruption. Focus today will be on EIA inventory data, which is likely to show substantial draws in the US stockpiles due to cold snap in the US that hampered production in last couple of weeks. However, post EIA data, prices gain may be capped as the string of economic data lined up later in the week will come into focus. Crude technically pivot is seen near 6,187. If crude oil price rises to 66,259, it might move towards 6,326. And if it drops below 6,097, we might see downside level of 6,030. Continuing with base metal update, copper might trade in a range-bound manner as funds adopt an increasingly bearish stance in the copper market, preferring to focus on globally weak demand picture rather than sign of supply chain stress. US PMI due today. Any renewed weakness in PMIs could lead to profit booking in metals complex later in the today's session. Technically, pivot in copper futures is seen near 723. If it breaks above 724, it may move upside of it to the level of 726. And if it drops below 721, we might see downside level of 719. On currency front, for rupee, the scenario for sharp depreciation is now pushed down to the road. Rupee could remain in range for much longer period than previously envisaged due to turns of events at the Fed. The next 2-3 months are very critical for the markets. Meanwhile, dollar index seems to be steadied around 103.50, hovering its highest level in 6 weeks. Markets are now pricing less than 50% chance of Fed rate cut in March, down significantly from near two-thirds chances since week ago. For today, economic events are US manufacturing PMI and service PMI, US crude oil inventories. So that's all for today's podcast. Have a successful trading day. Thank you.